Hello. I hope you're off to a great start of your day or having a terrific day. Thanks for stopping by. Thanks for checking out this video. I appreciate your time. Today, I want to talk about how much the U.S. housing market is worth and how that breaks down by generation and just some other insights about equity and future value. I'm going to do this really leaning on an article by Ben Carlson from A Wealth of Common Sense, which is a terrific free newsletter. The name of the article is How Much is the U.S. Housing Market Worth? And it uses data from Redfin. So here's the deal. Today, the U.S. housing market is worth just a touch under $50 trillion, 49.7 to be specific. And that roughly equals the same amount as the stock market's value. More than that, the U.S. housing market worth has doubled since 2014. So in just 10 years, it's more than doubled. It's gone from 23 trillion in 2014 to 49.7 trillion today. That is a ton. Now, more good news, 70% of that $50 trillion in housing market value is in equity. Means Americans are sitting on a ton of home equity, a ton. Right? And if you think about average annual returns for housing in the United States, let's just look from 2021 to 2024. Annual appreciation has been 19%, 6%, 6%, 4%. Is that crazy? That is just crazy. And so there you go. Now, millennials make up just 20% of the U.S. housing market, but they're slated to be the biggest generation of homeowners in U.S. history. And it's going to happen sometime soon, within the next few years, we're going to see that their percentage of home ownership dramatically increase. There you go. So let's look at the article, and then let's get some action planning. What can we do? What does it all mean? All right, here's a look at the article. How much is U.S. housing market worth? You can see right here, the up over time, it's now worth $49.7 trillion. Very good. This right here is home equity. Wow, right? Since 2011, look at that. $34 trillion. That's great. Right here, it just says people are not, tapping into equity or credit. It's still usage. Overall credit is low. Below pandemic, you can see here, this yellow dotted line is how much people utilize home equity. And this is today, so we're well below the historical average of 51%. All good. Now here you can see the millennials just own this little sliver, 20% of home ownership. You can see boomers have the biggest percentage, followed by Gen Xers. And then here's the last thing I'll show, and then we'll get to this. So in this, Ben ends his article with hope. He goes, look, millennials are going to be able to step into the marketplace. They're going to be able to really realize the dream of home ownership. But what has to happen is home prices need to stay flat and allow their income to catch up, and or interest rates need to come down, and or home prices need to come down. But any combination helps. But another elixir is supply. If just a ton of supply comes to the market, which will depress values, either flatten values or possibly depress values, as they saw in Austin. So there was a massive building spree of rental units in Austin. And what Ben says in his article, and what he uses from the local paper, is Austin rents tumbled 22% from peak on massive home building spree. That's right. So rents came down 22%. There's all sorts of deals like 2 months free, no credit signing, stuff like that. So inventory, whether for rental or for ownership, is one of the solutions to affordability, and that's what he advocates. So that's all the data. I think it's really useful data. That is Ben's path forward. But for us, you know what this means? Baby boomers and Gen Xers are sitting on a ton of equity. We need to make sure that we're building lifetime journeys for those clients, those baby boomers and Gen Xers, that we're sticking close to them, we're providing value, we're helping, guide them into upside or downsizing, even selling or equity extraction, possibly taking equity out to help their millennial grandchildren buy homes on their own. We need to stay really close advisors to those people with trillions of dollars of equity. At the same time, we need to be building, prospecting strategies and funnels to capture millennials. So we need to keep in relationship with the Gen Xers and the baby boomers, and at the same time, we need to build funnels or prospecting strategies to attract millennials, and we'll have both sides of the market. And this market is going to be massive, and there's so much positive outlook for the future. We're in a little bit of bumpiness right now. The economy is a little uncertain, and global politics is crazy. Rates are staying sticky high. Affordability is a challenge, but man, this massive boom market is coming to us all. So that's my message today. That's the information I'm sharing today. I appreciate you stopping by. Do me a favor, stop by and check out my social media. On LinkedIn, I do a post every day, 1 or 2 posts every day with information like this. In fact, I posted about this article today. I put a link to the article in that post. I will also put a link to the article down below. This is a great article. Ben Carlson does great stuff. Subscribe to his daily newsletter. With that, thanks for giving me some of your time. I hope you got something out of this. I look forward to talking to you again soon. Have a great day.